following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Going to try to connect some dots here this morning. Just let you see some currency relationships to what's going on with a couple of commodities here or there. But I want to show some relative weakness, relative strength that we've tried to point out that were some kind of things put on the radar screen lately. So we're going to take a look at those. But we're going to start out with crude oil, and we've obviously kind of rolled over to the February contract here. So let's just, since we're doing a roll, 45.77, that new mark up top, that was very similar type area. February contract as January contract, similar inflection points, just adjusted accordingly. Excuse me. Right now in this particular contract, we're trading 36. But the thing I want to point out, is as we drifted below, in this case on the February contract, the 37.55. Good morning, JB. I didn't see that note in the den. Good morning to you. We've got a yellow indication here on our bar. I'm going to go into the scanner. I'm going to the future sections. And by the way, I talked about getting this out by Friday when a lot of the programmers left for going to a well-deserved holiday. We've got some guys stuffing things into the database. So, for instance, like on soy meal, as you can see, we're having a couple little small things in the database that are causing some trips in the finishing of part of this, showing the charts here. I'm going to go to crude oil, and as you can see, we've got a couple of things we're working through on the back end right now. And, weekly, as you can see, very similar to what I'm showing in E-Signal, but we want to try to I hope you guys are seeing this. We want to try to shore this up before we release it to you on beta. We're going to give it to everybody in TFNN very quickly, just kind of adjusting some things on the back end here. I think it's a great addition to this product. I just can't wait for you guys to have it. I won't be using another charting package after we get this in, except for the buy and sell button, of course. Here we go. So let's take a look at crude oil. So, what's going on here is we're just starting to have hints of the yellow peel back on the February. So what I want to do here, and let me change something really quick because I forgot to change it since we're moving to February here. All right. So what we want to do here is we want to look at this as a profit-taking situation. I'm from North Carolina, remember that. So as we start to see these yellow peelbacks, and the scanner's going to have the February product in just a couple of minutes here. It's still got the Jan. They're adjusting that too right now. You'll start to see that yellow peelback, which will mean that we will more than likely start a good possibility to start seeing a new demand area down below. And that's okay, great. That's a situation where, the market may pause. It may rally back up past that demand area at some point, but it's a really good indication historically, as we've done our back testing, when that starts to appear. You may want to step off the gas pedal on the short side for a little bit. So in this case, and, as we look at the scanner and we go into these, just as a side note, as we go into the breadth situations, you'll start to see new boxes attempting to appear below. That's a that'll start populating the speed dial with a yellow section here. You don't see really any big yellow sections right now, especially on the downside, and especially on the daily. You don't see a lot of new profiles attempting to appear. That's kind of an indicator in itself. We've got a little bit of a bounce here off of the. Let me just go back into the S&Ps really quick here. Let me save this while I'm on this topic. We've had a little bit of a bounce that we talked about yesterday at 1993. But because we don't have a lot of new demand areas happening on the S&P breadth on our daily, this move doesn't have a ton of validity in it to me. So we come back and we talked about that 21, 22 up in the 20, 21, 22, 20, 25 area. That was going to be something that was supposed to be acting as support before, now acting as resistance. And you've got that big support area, 1993 down below. Don't see a lot of reasons to take a huge angle on anything with the S&Ps right now. And have I jumped around enough today? I just wanted to point out that there's no new profiles in a large way attempting to appear, even though we've had this bounce off of 1993, which was great to know where that was. The broad market has not really shown, a lot of new footing to be put in place on the as we have bounced the past 24, 48 hours. So take that as an indicator in itself. And when we start seeing those exhaustion, new profiles attempting to appear, you can't really map that in our historical breadth charts because they can appear, they can disappear. And when a gentleman, I think it was Tucker from Florida, was talking about one day these exhaustion possible moves, and and as we look at this, I'm just going to point out on our breadth calculations on the index, is that a possibility of, and where's that threshold? Here's something where we're getting above 60%. I would say that's a pretty good extension when it comes to red over green, green over red. But you've got to also take a look at that new profile attempting to appear yellow section, which we cannot map in here. So, these over exhaustion areas getting above 60% on the red are decent turnaround situations, but you can always go past those. And I like to look at that yellow section on the odometer and then just kind of drill down into these statistics on the left on the breadth charts. Okay, let's get back to crude oil. Sorry for the detour, guys. So when we go into crude oil, what are we really looking for here? New demand area attempting to appear below. The 240s have kind of regulated this trade down. And as you can see, we had a really good trading opportunity back on December 14th. We had a pretty decent rally there, but the 240s kind of predicated when it was okay to get in the water there on the long side. We may have a similar situation here. So I could envision using 36 as a support if you're going to try to nibble on this on the long side, but it's definitely a trade against the long-term trend down. All right. Okie doke. So we're going to, that being said, and, the kind of the world thinking that crude oil is possibly not now going to go to hell in a handbasket. Let's look at the dollar. And we talked about the close above and go back and retest. And this is in force right now. And we want to talk about, how this is affecting other currencies and which ones are showing their hand now. We talked about that at the beginning of the show. We're going to follow through with it now. So here we go. So bottom is 98.04. We've been talking about that. We've reached a price low point this morning of 98.15. I'm going to call that in the neighborhood, guys. And what I'm going to do is I'm going to go back to my futures section, and I'm going to go into the dollar index. And as you can see, that bottom is sitting there. Price is right there at the bottom of our profile on our weekly, and that's telling me just as plain as day that we're sitting there. And what we want to do here, as you can know, that arrow up on the 4 on the daily, what we want to do here is go into, I'm sorry, we want to go into another currency, and let me get to my other server here. That being said on the dollar, and the situation is dollar on support, I always know which server is my currency server, because when I kind of gaze across the servers that are open, the ones that are flashing the most. I mean, if you guys knew how much taxing effort it puts on the servers to do currency pairs that we're doing here, I think we've got, and I go to my currency side. What do we have in here? About 25, 30 currencies. I mean, this just, 4 time frames, doing all the calculations, outputting it, blah, blah, blah. It is amazing how fast these things trade, and amazing how a computer actually keeps up with it, but it's very taxing. So as we look at the dollar sitting on support, let's just take a look at the euro. And again, my views, dollar bounce on support type situation. The euro, let me pull up our weekly here. The euro, in my opinion, is just kind of, we've popped up into the balance area, we come back below, now we're rallying back up. But the dollar being on support, I'm actually okay even getting into this trade on the short side within the noise area of the bottom of this profile. I'd love to see it get back down below 109. That would be the kind of the telltale sign, I think, that it's running out of gas on this bounce. And I also want to show you the Canadian dollar. So, you mean the euro is obviously reacted very well for when the dollar pulls back, but the Canadian dollar has just stayed up on a shelf up here. Crude oil's kind of showing a little bit of a bounce opportunity here. The Canadian dollar would probably like that, but this is one, if the dollar bounces, this Canadian dollar is going to get devalued again. And it's kind of showing the relative weakness already. So this is kind of a relationship that, really may be able to be taken advantage of here. Here's the weekly. No new signs of pullbacks on this thing. No new yellow profiles attempting to appear, the whole 9 yards. The Australian dollar, this is something else starting to show itself again. We talked about, a little bit more of a noise area than I wanted to see, but getting back above this 71.69, it's okay to be in the water. If the dollar gets stronger, this is obviously going to have a couple of headwinds here, but I still feel like this is a relatively safe trade. Holding up extremely well lately in the decimation of the commodity sector. So that's the situation on currencies. Dollar, looked at crude oil a little bit. We're going to go to break, come back, and hit some underlying instruments. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. We're finishing up with some currency relationships. Talked about crude oil. Went in the left field about the S&Ps really quick with the breath. Thought that was useful. Man, my hair is getting longer. We have to get a haircut this week. Starting to look like Phil Spector. That guy had some crazy hair, huh? Oof. Did he end up killing? Oh. Did he? Was he in a murder case? I could never figure that out at one point. He was the rock and roll guy out in California, L.A. I guess LA at some point ends up getting under everybody's skin. I can't hang out there. Not my cup of tea. All right, guys, we're going to take a look at Apple. And I was talking to Tom on his show yesterday. I'm actually long-term bearish on this instrument, just like he is. But, when we get down into these major inflection points, you got to, you've waited patiently. We rolled over and through that 112.5 down into 112 area. Why was that important? If you'll notice in these wide profiles, I'm showing Apple right now, these POCs, you've got to seriously pay attention to them. And these are long-term profiles, and they got very, very wide, 25% of the value of Apple. I've never seen a profile this wide relative to this. I mean, this is crazy. But when that happens, you kind of are licking your lips because you've got a really good kind of top of the mountain. I mean, these are point of control, peak of distribution type parts of volume relative to price. So when you roll down one side, you're going to pick up some momentum, especially, I mean, if you've used it as support before, as you've seen there. I mean, it's just awesome how this works. I mean, this is long-term view on Apple, and we've been able to kind of utilize this blue line. I have been talking about Apple a ton the past fall and the winter here, but we talked about the breakdown that could happen if we got down below 112.1.5, and we had a caller come in. There's that 112.1.5 area that we broke down, consolidated, and then hit lower. But you got, in my opinion, you were offered a trading opportunity on this stock, and I'm gonna go back into Apple. And we had a big bottom showing yesterday all day long. We've kind of bounced, since then. And let me see what Taz says here. Prices in the lower part of balanced areas between 112 and 114. We are still in a long-term trend. New breakouts are above. Okay, so that's the long-term situation. The short-term trend is favorable to shorts. Been in force for 5 days. Primary resistance at 112.08. A lot of those things are very, very true in that automated text. But what do you do with it now? In my opinion, you could retrace easily back up into the 108.5, 109. So catching a bid from that balance, from that unfair low at 104.29, that general neighborhood, you can look at that as like a 7% move in Apple. And thanks very much. Take it easy and move on. I don't have any long-term hopes that Apple's going to bounce very hard here, but it definitely offered a trading opportunity, and waiting patiently. It's another great example of waiting patiently until you have something to hang on to, and you really, didn't have that offered to you anytime between 112, 112.5, and 104, 105. So again, remember, on a long-term view, these inflection points, you're going to have to give yourself a little bit of room around it, and especially when you've got a massively wide profile like this, it's you can't just, it's not going to be to the tick every time. So that's the situation on Apple. Not a big fan long-term being long, but you got a trading opportunity, and the scanner put it right on the radar screen for you. Okay. We're going to take a look at Disney really quick. I know you guys are probably tired of hearing about this particular stock, but there's some insight to be had. Let's see. All right, so 112.5 really should have reacted a little bit better on some news lately. I understand that. That's the big number, 112.5, and now we're getting below profiles on the daily. So what do you do with it now? I haven't been talking about this stock a lot, but as we look at it, it seems to me that we could easily revisit the 96.42 area in this stock. You got a big wide profile here. You've got some support for a trading opportunity if you wait at 102.83, just like Apple's. Very, very similar situation if you look at it. I mean, this is, has been the darling of the upworld, and got a big wide profile here, and you might see some bounces at 102.83 before we head farther south to 96.42. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Man, I'm so proud of everything on TFNN. It's a quality network. I keep it on all day on TV with a Google Chromecast. It's just awesome. And then when I see this crap that comes out from these other services, it's just mind-boggling. I don't know. I mean, there's two things that could happen when you have a product to get it out. You can either jam so much money into it that it's out there and people are touching and feeling it, or the product actually has enough legs on its own to be attractive enough that people just want it. So those are the two ways to get something out: brute force, and actually the product has value. A lot of these guys just use the brute force. The TFNN side of the equation actually has a lot of value. And the more I listen to the hosts on there, on this network, the more I get out of it, the more I learn, the more it slows my trading down to the point where I really want things to line up, because a lot of the guys on the network are saying sometimes different things, but it's good to get those perspectives. And it's I talk about this a lot, and I'm telling you, I've been through the Board of Trade years. I started I went down to Florida with, kind of a book bag on my back in the mid 90s, before the internet really, and was looking for a place to trade. It was either go to New York or go to Florida, because I ain't going to New York. So ended up going to Florida, getting involved with a day trading operation there, and ended up converting to being the house, if you know what I mean, not being a trader, but kind of developing out the the brokerage and the technical side. And, the more people, back then it was a little bit different situation. There was a lot of free money out there with the SOS machines, and Daytech had a watcher screen. It was kind of written in Fox Pro back then. It was a different time. You had to have dedicated pipes going everywhere. And those were relatively, and Tom will probably chime in here if he hears me, fractional T-lines and how expensive everything was back then. I know he knows what I'm talking about. But, ultimately, the more people trade, the more often they trade. And I'm not saying trade once a year, but if you sit there all day long, and especially with these computers now, and go on hunches and trade a lot, you'll just turn your account up. I mean, the good thing about TFNN is you get all these different perspectives, and I think you get the technical side and the fundamental side, and then you can make, really good risk reward, decisions and points of entry and points where you got to say uncle without question. That's a big part of the game. But slowing trading down is not a bad thing. And, watching these lights flash on the screen all day long is difficult to step back sometimes, and be patient. But I'm just telling you from experience. I don't need a statistical reference point coming from a news organization to tell me this. It's just something that, experience has been able to lend that credence that is the case. Okay, let's get back to business here. All right, so we're looking at Cisco. What I wanted to do here is, this market's bounced a little bit. Obviously, Cisco's in the tech arena. I think this thing actually could come off more. 2673. There's a lot of uncertainty, especially with this election coming up. End of the year, market's been down this year. What are people going to do about interest rates? There's, investors do not like, and therefore markets do not like, everything up in the air. All right, so I would consider this everything up in the air. We could drift off some here. Notes and bonds are kind of hanging in there. That's kind of predicating everything I'm saying. So 2673 on Cisco got a big inflection point there, and I think we're probably going to be able to use that to drift a little lower into the next year on Cisco. All right, I'm going to go into. I'm bad about reading the comments here. Oh, my hair looks fine. No, I'm feeling like Phil Spector this morning. Just stop listening to me. Okay, so as we looked at this the other day, I'm going into the scanner, and as you can see, I've chosen downtrend resistance. All right, so what does that mean? That's a custom filter. There's kind of the semi-formula there in layman's terms. But we were looking at this the other day. Cisco's on it now. Caterpillar was on it the other day. It's obviously not on it today because we're not bouncing again like Caterpillar showed us. Let me go to CAT. All right, so again, I think Tom and I were talking about this. We were talking about stocks that are in downtrend resistance. So obviously, this thing's getting the heck kicked out of it here. Dollar is not helping this company whatsoever. But we had kind of got that sympathetic bounce, if you remember, when we were looking at this as a candidate on downtrend resistance. It said, hey, I've poked my head up. Please whack it off in a downtrend. 67.85, we were right in that neighborhood. It was on downtrend resistance. And that means stocks in a downtrend that have kind of started rallying back up in inflection points. And you literally got a 7 or 8% move in 36 hours on Caterpillar. Dude, did I say dude? That's something you take to the bank. If you can get that risk reward off trades like that all the time, and the scanner's going to give you, and again, don't get carried away and trade everything on here. But the scanner's going to give you those. Put it on the radar screen. Maybe put it in a custom portfolio little situation that you can go over here and create custom portfolios, and just see how it acted. Go back and look at it later. Get some confidence with what's going on. It's not going to be winners every time, but I guarantee you it's okay. So IBM. All right. So let's look at this one. IBM. The bane of my existence. Just reading the den here. T1 line's expensive. You know what, JB, talking about T1 lines, we had a T3 in our office in Chicago, and I think that was the equivalent of 27 T1s at the time. We paid $20,000 a month for it. We paid $38,000 a month for rent to the Board of Trade, which sucked completely. But that T3 line was, I want to say it was 20 grand. And now here at this place I'm sitting at right now, I think I've got this is a really cool, unique situation, by the way. Got a gigabyte up and down from here, and I'm paying $100 a month for it. It's a crazy. All right. Okay. All right. So IBM. So what's kind of interesting about this? Here's the daily. Here's our long-term weekly on IBM. All right. So what it's saying is, okay, and it takes into consideration these consolidation closes that are happening below this unfair low here. And there's no mystery to anyone. IBM's come off pretty hard here. But as we look at this, markets rally. This thing can't really get out of its own way. And we've got that big inflection point around 136. If any stock's going to go south, if the market pulls back again, guess what? I mean, you got a real good relative strength trade, and you've got the scanner saying, I'm consolidating, and that's one of the functions in the code that's putting these on the radar screen for you. Are we consolidating down here, and are we ramping back up into that inflection point? It doesn't take into consideration that relative strength situation versus the market. But what I want you to do here is take a hard look. It's always what's the tide of the marketplace. Basil, thank you for saying that one time. I've used it about 1,000 times. What's the tide of the marketplace? What are the candidates showing their hand? And then how do I enter and, more importantly, exit the trade if I'm wrong? So those are kind of the three steps when using the scanner. And right now, you don't have a lot of lofty aspirations that this thing's just going to continue to climb. I don't see it. The worm is kind of turned with these long-term speed dials, and we don't have any new profiles attempting to appear on the long term. So, this is kind of a continuation situation. And IBM being a weak stock in a market that may turn south again, you're kind of doubling up on your good probabilities there. John from Philadelphia, am I confusing you, or are you confused in general? I'd really like to know that. Because if I'm confusing you, maybe I can back up. Okay. One of the things I also want to talk about today, we've got this heat grid, so to speak, that ranks indices globally. And it takes the internals, does the calculations just like it does on the S&Ps, and basically allows you to rank them on different time frames relative to our profiles. Gotcha. All right, so when I go into the TIE Set 100, we got a broker that's rolling this out in January over there. We actually white labeled it for them, and they want it restricted to TIE stocks. When you look around the globe, the S&Ps are one of the harder instruments to trade on the planet. Okay, that's why we always talk about spreading the risk out, playing the odds across the board. If you're even winning 50% of the time, that's a victory, because you want to stop out at 1 and do the risk reward 2, 3, 4, 5, 10 to 1. That math will work out in your favor over time. But as you look at different instruments on the U.S. landscape, some of the things that go on overseas, what I've learned is in traveling is some of these places are always 5, even 10 years behind the latest trends that are going on in the States. And for instance, in the Philippines, it's like 20, 30 years behind on music. They're still, whatever. It's some people like certain things, but anyway, on the trading side and the technology side, when it comes to trading, you've got, if you looked at an execution system in Malaysia, I mean, you would be terrified to place an order. All right, that's what I'm trying to say. So a lot of these things are kind of backwardated and not efficient, and that goes for marketplaces also, is what I'm ultimately trying to tell you. So when you look at some of these other marketplaces, Thai, I'm looking at Thai right now, Bursa Malaysia, Nifty 50, things like that. You don't have, the massive efficient big time market players in there really closing down spreads, and everybody kind of margins are getting lower, markets get efficient. These markets aren't as efficient, and there's a lot of I hate to tell you this, but there's a lot of fresh fish, people that literally look at this like a lottery, that are Thai citizens, and some of those guys. I watch how these people trade in Asia when I'm there. It is completely the Wild Wild West a lot of times. So if you look at these breadth situations and you look at the crossovers, especially on the Thai Set 100, I'm just going to look strictly at crossovers. I mean, this is our weekly crossover. Take a look at some of these things. I mean, and take a look at our automated systems that we've run on Thai stocks just do incredibly well, and the Thai index itself, and that's based on, again, overhanging breadth overtone. And then we look at index inflection points, and we try to get an edge and a biased opinion based on only taking longs or only taking shorts relative to what the breadth is telling us, positive or negative. And then we say, okay, we're at an inflection point. Breadth is positive. Okay, we're not shorting below that inflection point. We're buying support. That type of general concept. And when you look across the globe and you look at some of these marketplaces that are traded differently than ours, and again, going back to the S&P is one of the harder instruments in the world to trade. A lot of these instruments sometimes follow technical analysis even much better. And even some of the stuff that John Murphy did a long time ago, a lot of those things actually to some degree hold true in some of these other marketplaces, and our information really does well. So, I welcome you to kind of take a day or week or month or the rest of your life to go on an endeavor to explore how instruments act in places other than the U.S. Could have said that in one sentence, I guess, but thanks for listening anyway. When we come back, we got about 20 seconds left here. We're going to take a look at the Treasury notes, and any other questions you guys have the last 5 minutes of this show, just throw them out there in the den, call in. We'd love to hear from you. This is a great time of the year to just answer questions in general. And again, I would personally love to hear from you. So we'll be back in about a couple of minutes, and we'll wrap up the show and get you guys on to celebrating Christmas.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I think we have a caller, Mike from Dallas. Mike, are you there?
Yes, John.
Hey, how are you?
Thank you. John, one time I was a guest on and used the TAS system.
Uh-huh.
And to be quite honest, it's still confusing for me. And to be just up front, I need to understand what I'm buying. And are you going to have some kind of a webinar maybe for simpletons? and kind of, I guess I'll say a baby step seminar to the TAS system.
Yeah, if you kind of watch this show and listen to me for a while, it's
every day.
Yeah, well, thank you. That's the first thing I want to say. But this thing's kind of been in flux for a while, and we've been upgrading it, and finally, I've got some time now over the holidays, and I was hoping we would have a couple of things done before now so I could kind of go ahead and start this process I'm getting ready to tell you about, to sit there and hammer out an entire education series, not for cost, for free for everybody, in succession from kind of the layman's terms. I'm not going to use simpleton like you said. The kind of the initial kind of, not low level, but just kind of where to get started, and then really some high level things.
Okay.
And now that we've got these charts in there, Mike,
right.
I didn't want to do this and kind of veer away from the program to another charting package and all that. I think I can do these now, happily said, to stay inside the container the whole time. So if you wait literally like a week, I'm going to have some people on the beta big charting package. Sean, who's been sending me emails about that, if you're listening, that's going to get out to you guys. It's a beta package of the big charting package, and then I'll have the video series done with the scanner, and hopefully all those historicals will be in the charts in the scanner by then too.
Well, I trade Nadex, okay? And I trade spreads.
Great.
And I'm just trying to find a way to incorporate that into the Nadex spreads, and that's kind of my dilemma, John.
Well, Mike, I tell you what. I mean, we've had a lot of. I get inundated with Nadex people, and I'm going to do some educational video part of this whole package on, because I think this product is so appropriate for Nadex, because a lot of people get carried away, in the short-term stuff and the binaries, and I'm a victim of it too. I spent some money going, wow, this is like, let's pull the lever. But I think there's a much better way that everybody should be using Nadex relative to our information. And some of the things Daryl talks about are great. And I think some of the things he says, combined with kind of waiting patiently until these levels are either hit or that's kind of your target rich area. I think this is a killer combination, and I'll focus on that on a couple of the videos, Mike. Okay. Well, listen, I appreciate it, and I hope you have a wonderful Christmas. Man, thanks for calling. It was great to hear from you. Thank you. Talk to you later. Bye-bye. Okay, man. Well, we got about 10 seconds, guys. I was going to hit the notes, but we don't have time. I'm just going to say something about silver. We poked our head up. 1443.44 is that unfair high on the daily. On the March contract, we've got about 5 or 6 cents from there already. That neighborhood, in my opinion, has been satisfied. Might need to be happy with where this thing's gone lately. Guys, stay tuned. Larry's next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.